Hello and welcome back to our channel where we speak all about futures, about the technical analysis, the psychology, the importance of understanding what really is going to happen, which of course nobody can absolutely know what will happen in the market because it's controlled by the large institutes, the big money. Okay. And actually, when I was mentored by Bob Proctor, he was always mentioning that there is a law for big money. So if we don't understand what is big money, it's very hard for us to really, join the club, so to speak, and trade like institutions and the big money. So here today we will talk about that in that video, and we will just dive into understand more, because for me many times when I heard diversions, I was thinking what exactly that means. What do I need to look at when there is a diversion? What will happen, right? And maybe it's a question that you ask yourself too, and I will do my best today to explain more about that. So when you see a diversion, you know what you will need to do next. Okay, so diversions happen in basically a few instruments. I will share my screen here. Okay, and I will explain exactly what we need to look at. So basically, diversion will happen in different instrument as confirmations, but on such instrument, we will talk about basically VIX, ES, and we will talk about Nasdaq. Okay, so obviously, as you know, on the indices on VIX, Nasdaq, um, ES, the SPYs, the YM, the Don Jones, and the DJI, right? There is one more that we want to make sure that we have our BADJ on. You don't have to do it, but it's something that I do as I'm learning from my mentor as well. It's basically to have the gap up and gap down, basically merge together. The price will be the same. Like you can see right now, it's 20,175. It will be the same, but it just will shorten that gap. Okay, so where do we look at diversion? So right now you will see here that we have uh, 0. Uh, 0.09 minus and 0.12 plus. Okay, so some people will say, oh, right there is a diversion, but that's not what you really want to look at. When you want to start pay attention to those diversions, it's if, let's say an example. One second, let me change my color here. Okay, so if let's say an example, the NQ will be negative 1 and 21%. Okay, that's on the Nasdaq. Okay, and on the ES, on the other hand, we will have, let's say an example, 1.20. Okay, percent. So anything that is above 1%, okay, meaning on the negative or the positive, you want to pay attention. If it's smaller than that, if it's 0.15 and 0.7, you don't want to look at it. Same thing happens if we see on the VIX and the ES that it's 1% up on the ES and 1% up on the VIX. We understand that it's a diversion because overall the VIX will provide the pressure on the ES, not on the Nasdaq, on the ES only. Okay, why? Because what happened with the VIX? The more puts we have on the SPY, okay, so basically on the options, we have the big money buying puts for the downside. Okay, I can change that now to the red because we're talking about the puts, and it's more important to understand that puts basically will be selling going on the downside. So what happens? Okay, we have a higher potential that on the ES we will have a rally. Okay, so that's the difference. Now, when are you wanting to really pay attention to this this importance of diversion? Because it might be that there is a, you know, -1 on the ES and -1 on the VIX, but yet there is not much that you can do with that. When you want to give it more attention, okay, it's if, let's say, an example. In this case, I didn't do my pre-planning on the ES today, but if, let's say, an example, it's coming to a key area, okay, and this area would be my entry point, and the VIX is having a -1 as well as the -1 on the ES in terms of a sell-off. So then we understand that in this area we will have a reaction to that diversion, and now we will have a massive potential probability of a bounce. Okay, so it's very, very important to understand that. So whenever you have any type of instrument that is a confirmation for a long and you see a diversion, that's when you use it. Okay, the same thing if you see, let's say, an example, Nasdaq and ES as a diversion, and one of them it's closer to your key level, so then you use it. Okay, now how you want to know on which instrument to use? Okay, this also was a very great lesson that I learned and was important, so I will expand on that. So let's an example. Right now we are looking at Nasdaq, okay, and we know that we are trading Nasdaq as an additional confirmation with the ES, right? So what we will want to look at is basically at this part right here, okay, as potential confirmation on which instrument we want to trade, okay, and I will explain what do I mean by that. Let's an example. Right now we are seeing here 3.47 for the week, and for the month, for the 3 months, 6 months, year to date, and the year, and so on, right? If we go now, okay, so actually what I can do, I can take, sorry, I can take that in green here, and I can actually, I can write that here. So 1 week, okay, we have 3.47. 1 month we have 4.47. Okay, 3 months we have 6.04. Okay, we can focus on those ones only for now. Okay, so now that we're looking at that, what we want to do, we want to go to the Nasdaq, okay, and we want to see. So what we will see, that in comparison, okay, you can see that the Nasdaq it's much stronger, okay, in comparison to the ES. Okay, so when we will be taking a trade, we want to make sure that we take a trade on the one that is leading and that is stronger. If it was the opposite way, that the ES was stronger because the percentages, so we want to make sure that we trade on the one that is stronger, which in this case would be on the ES. But now, because it has more strength on the Nasdaq, we want to make sure that we look for potential entries if it's for the short or the long on that instrument. So it's important to pay attention to that. Many traders, many people that look at trades and enter, they don't even look at that. And you can ask yourself, when was the last time that you looked at something like that? And I can tell you that I myself also didn't look at it as often. Sometimes I did. I will not say I never did, and maybe you did too, but more often than not, I don't pay attention to it. And yesterday, when I was with my mentor and he was mentioning about that, I was like, wow, you know what? It will be of great importance to look at it more often than not. Not every day, doesn't have to be every day, but anytime that I'm looking to take a trade on a key area, I want to make sure that I pay attention to that. And you will see me now pay attention to that a lot more, versus the other times on other videos, you probably didn't see me look at it at all, because it's not something that I repetitively look for and confirm. So I was very happy that I was, reminded of that, because more often than not, we need to be reminded than taught. Okay, so once, like, you see it maybe here and there in some videos, and sometimes you forget, because it's just human nature to all of a sudden get distracted by something else and forget of other confirmation, other things that we needed to have for our trading. So make sure that you remember that for your future trades. So if you want to take a long on on one of the indices, which will be ES or NQ, you check that before you do that. It will be very great. Actually, here also the other one, it will be the RTY, the Russell. You want to have your you want to have your BADJ on the Russell, ES and Q, YM, and VIX. Okay, so those are the 5 instruments that you want to have BADJ turned on. Okay, and this is pretty much from the diversion side. I hope it makes sense, and it's self-explanatory on that, because for me, I was mentioning, look, like, I understand diversions, but I don't really understand what the heck is that diversion mean. Now, some people use that on some of the indicators, like there is this RSI, I believe, that some people look as diversion, right? Let me see if I have that RSI right here. One moment. I will look for that RSI. So when you see the RSI, some people like to look at it in such a way, if it's above 70% or 30% or something. I'm not too sure about that. They like to buy or short, right? Depends on what their instrument shows them. But there is also diversions on that. I personally don't use those type of indicators. Only indicator I use it daily lines of 100 and 200 moving averages, and sometimes I look for additional confirmation if need be on the 20 and 50. Okay, but let's say an example for this purpose. We look at the RSI. So what we're looking at is basically finding a diversion on that. So what would look like a diversion here? It's by the way, here also looks too long, right? Uh, based on based on what I understand. I'm not too familiar with that indicator. Okay, and then what happened if you long here? So you see it would go sideways, and then there will be like squeezing you out. You look to maybe step out because it's key levels, and then it will start bouncing right here. So not sure as to where would you want to enter. Now, what would be a diversion? A diversion on that will be, if let's say an example, we have here, right? We have here, no, it's straight, this upwards. So a diversion will be when the chart, like the candles, move upwards, but the diversion on the RSI moves downwards. So let me see here. So more or less here is an example. So let's say here it's moved up, right? Here it's moved up, and here it's moved down. So up and down, okay? So then, like it's also on this area. So now that it's moved up and down, you can see that it's at importance of your trend line. So you can then take a short. Now the trend line here was still formatting. So maybe on this case wouldn't be the best scenario for you to short. And again, because I'm not using this indicator, I cannot give you 100% advice on that. But on the ones that I'm learning from my mentor, I'm able to tell you more about that because it's something that I will be looking and using for my own good as well. Okay, so that's very important to understand. You also can see here for now, it's not breaking the new high, which for the last couple of days, every day almost, it was breaking new highs. So it's very important to keep that in mind. And you can see here, it didn't break a high, it's actually rejected, and then it's consolidating here. So it's pretty much building a balanced um, zone, and potentially will have a rejection. Now, will it happen for sure? We don't know. So I personally don't trade on something like that because I don't want to risk of that. Now, yesterday I had a you know very negative day in terms of my PNL, and I trade against my rules, and I did like a very like not reasonable type of a trade. But today I already did a few trades that recouped 50% of my losses from yesterday, which I'm not looking to chase my losses or my profits. I'm looking to trade my plans and have it systematic. So that way I will be able to be here for the long haul and be able to share with you my systematic approach and gains over the years and over the months and every day that goes by. That's the important part for me, and hopefully I will be able to transfer that to you to have you profitable as well. That will be a great win for the community and for me as a whole. Okay. So this is pretty much on that. If you guys have any questions, please feel free to share them in the comments. Actually, this zone played out amazing. The 12 hours. I when was that? That was May 15, so 3 days ago. I wasn't here. It was a holiday for us, but played out phenomenal. And that's based on a daily. Wow. Okay. So played out phenomenally, and you can see, like it's multiple days that you needed to wait to have those take profits. Okay. BADJ. Oh, so I charted that on not BADJ, and then you see, so that's why it's so important to make sure that you have your chart always on the BADJ to make sure that you don't get that confusion. I always stress this enough, and sometimes I myself forget as well. So it's important. It's important to make sure that if traders don't show their flaws, then I personally wouldn't recommend following people that don't know how to show their flaws, because then you don't know what mistakes to learn, and there is certain ways to learn and grow. One will be your own mistakes, second will be somebody else's mistakes, and grow on that. So it's better to do that, and then that's why you also get a mentor. A mentor will share with you what works, and when you ask them questions, they can tell you what not working and why it's not working, because more likely than not they made those mistakes, and now they can share with you what those mistakes are, so you don't have to step on the same mistakes and get hurt from that. If it's financially, if it's mentally, if it's emotionally, whatever the case might be, you want to learn from mistakes. That's very, very important. Okay, so this is pretty much what I have for you on this video. If you have any questions, feel free to share them in our comments here below. Any compliments, any feedback, anything that you have, we will be more than happy to look at that, and we will be looking to see you in the next one. Thank you. My name is Aberonov, and I appreciate your time here. See you.